it's not surprising that we're seeing an expansion of the PMI, which I don't trust anyway, because it's basically a survey. And in China, there's a lot of surveys that I don't trust. But no, that's not a big surprise to me. That doesn't change the fundamental structural problems in China, though.
No, it doesn't change. And so what are you expecting from the NPC, where, again, the delay by a week is making you a bit concerned about what the final print would entail in terms of what they would be able to signal to the markets in additional stimulus?
Well, I'm looking for more than signaling. I'm looking for actual real money. Usually I poo-poo a lot of these meetings because they're, as they say, rubber stamp. This one is somewhat more important because the Ministry of Finance in the October 12th press conference said that they were looking at a more fiscal expansion. And the Reuters story that everybody's talking about is talking about 10 trillion yuan, which is more than double what the government has been referring to previously. So it is important. The problem, though, if the Reuters report is accurate, is that the expansion of the debt that they're talking about, we're not sure where that money is going to go. You could give money to the local governments from the central government, as Bill at Stan Chart just said, may basically centralize the debt. But if that money is going in to pay interest costs to the banks, then you're basically just propping up the banks. You're recapitalizing the banks. That's not going to do much for the economy because you're not putting anything into the real economy. And the second portion is to prop up the property market. And, once again, we're talking about 10 trillion over 3 years, and I'm estimating about 1.6% of GDP. It's not a lot of money. This is basically the central government constantly expanding how much money they think they can put out to convince people that the economy's on track. But we don't need symbols. We need restructuring of the economy. The symbols aren't going to cut it.
Andrew, before we wrap up, I do want to get your sense in on the market reaction. So if 10 trillion over 3 years comes out, how do you think the markets would take to it? And also, we had Chetan Iyer from Morgan Stanley a few weeks ago talk about how out of that 10 trillion yuan, 7 trillion, they believe, needs to go to boost consumer confidence. And so I wonder how all of that would trickle down into investors feeling more confident about buying Chinese equities.
I can't believe they said that because there's no indication that Beijing has any interest in supporting the consumer. So I think that's kind of a ridiculous comment. Certainly the market, 10 trillion is not peanuts. I mean, it's a significant amount of money. Market's going to take that on board. And I think they're going to be happy about that. And there might be a short-term boost. The problem is that it's a sugar high. It's a larger ice cream bowl than we've seen in the past. It's a banana split, but it's still not a full meal with protein and everything else you need because they refuse to do the structural adjustments in the underlying economy that they need to do. And Xi Jinping is waiting for the tech sector, semiconductors and the rest of it to come through, but that's going to take years.